It's time for the Trading Stocks Made Easy podcast. Each week, Trading Stocks Made Easy demystifies stock trading and investing so you can profit big. And now, here's the host of Trading Stocks Made Easy, the wealthy investor, Tyrone Jackson.
Welcome, everybody. It's Tyrone Jackson, the wealthy investor. Welcome back to Trading Stocks Made Easy. Today's one of my favorite shows because I get to talk about the market and my favorite stocks that I think are hot right now. So I know you want to stay to the end of the show to find out what the number one pick is, right? Right. All right. So let's get right to it. Essentially, we just got the Federal Reserve to lower interest rates a quarter point. Now, what does that mean to you as a consumer? Well, if you have a variable rate mortgage, your mortgage will come down. Car loans were coming down. Variable rate credit cards are coming down. Not a whole lot, but just a little bit. And when this happens, when the Federal Reserve, that governing body that's in charge of helping to regulate the U.S. economy, lowers interest rates, what does this all mean? It means inflation should slow down just a little bit, and the economy should be stimulated. So it's a good thing, and it's designed to help people spend a little bit more. The only problem is we're seeing job growth slow. So the U.S. economy is producing progressively less jobs every single month, and that can trigger a recession. So the lowering of the interest rates, which takes about 3 to 6 months to trickle through the economy, is stimulative in nature, but we're battling inflation and, of course, a White House that's, off the charts in many particulars. Not here to be political, but we know the stock market reacts to that. So I was very surprised today and today only that we got a mixed market instead of stocks just rising on the good news of the lower interest rates. Now, the stocks that I really like in this market will still do well. And remember, gang, the stock market is not the U.S. economy at all, right? Not at all. It's really how institutional traders like insurance companies, banks, hedge funds, the people who are buying 30 million, 40 million shares a day, they really run the U.S. stock market. And each day, we're really measuring sentiment amongst the big players. So let's say you and I are buying 100 shares, 200 shares, or maybe even 1,700 shares. Are we really moving the market? Are we really moving our favorite stock? No, because when you're trading primarily Dow stocks and S&P stocks, it's the bigger players who are really controlling the price. You buy 1 million shares tomorrow, you're going to help move the stock price up to one extent or another, okay? So today was just a day. The overall trend in the stocks that I like is still up, even though they may have taken a day off in the market. Let's get to it. I'm going to give you these stocks that I like. It doesn't mean you have to go out and buy them, but these are stocks that I see going higher within the next 6 months, unless, of course, something happens to slow down the economy. They won't rise, but I think we're in good hands. All right, let's go to number one. Well, no, this is in reverse, actually. Let's go to number 3. Now, one of the stocks that I really like is WMT. That's Walmart. Now, why is that? Well, as inflation rises, groceries, gasolines, our instinct is to try to get things like groceries cheaper. That's where Walmart and its stores and Sam's Club really thrive. Because instead of shopping and spending your money at your local supermarket where things are going up and up and up, they tend to go up a little slower at a Walmart. And this happens in slower economies. And when people are spending more at Walmart, what does that do? It drives up top line revenue for the company. So they're very good at pricing their groceries and everything they sell with a small profit margin and making sure that they lure you, the consumer, into all of their clubs and stores. Now, everybody that is publicly traded is pretty much a tech company, right? Including Walmart, because now Walmart Direct allows you to not have to go to the stores and get your groceries delivered to you for a fee, of course. Now that delivery fee creates billions and billions and billions of dollars of additional dollars for the Walmart Corporation. That is revenue that they didn't have before, which is telling me the dividend, your share of the company's profits paid out on a quarterly basis, is secure. So investing is not just about what stocks are going higher as quickly as possible. It's also about what? Wealth and residual income when it comes to dividends. I was talking to a friend of mine today about his financial future, his daughter who's in a very expensive school, their family wealth, and I was teaching him today about the power of dividends. And although the daughter is very smart and very talented, that college tuition is what? $95,000 a year. That's a salary. And if you've ever paid college tuition like that, Lord knows I have at least twice, you start to think, is my kid going to get a job that earns at least $90,000 straight out of college? Are they ever going to pay me that tuition money back? The answer, of course, is no, they're not paying you anything back. You're lucky if you get a handshake and a hug. So that is an expense that goes to you, but most college grads are not going to walk out with a $95,000 salary, and they're not going to funnel that money back to mom and dad for supplementing the cost of their education. But if you truly were educated, your family wouldn't mind paying that $95,000 if it was coming from covered call income generated in the stock market. Now, for most Americans, that's not going to happen. For members of the Wealthy Investor Program, that is going to happen. I always joke with my oldest daughter and I say, you went to college on an Apple scholarship. Because as long as I was able to make $9,500 a month, I was able to pay that NYU tuition. But what happens when you have two kids in school at the same time? You need a brokerage account that has at least $500,000 in it so that the market, your assets, are paying or supplementing for their lifestyle. Now, no one is really going to explain that to you, but that's why the trading technique that I teach, which is out of the money covered calls plus dividends, that will take care of a lot of your life's expenses. So, covered calls on Walmart, not the most profitable stock in the market, but a great investment. Why? 52 weeks from today, the stock was trading at $77. At the time of the recording of this show, $106. Not bad. Not a bad investment at all. Let's move on to what I would put as number two. My number two favorite stock in the stock market right now, which of course is Amazon.com. Now, you remember Amazon used to sell books, right? And when Jeff Bezos and crew decided that they would be the Walmart, essentially, of the internet, they got into a lot more products that generated more money than just books. But a lot of people think of Amazon as selling a little bit of everything. Their goal was to be the Walmart of the internet, and boy, have they achieved that, okay? Because they take fees everywhere. But what most people don't realize is their fastest growing segment is Amazon Web Services, AWS. That's basically their hosting service for high-end enterprises, as it's called on Wall Street, for companies like Netflix. Did you know Netflix is hosted on Amazon AWS? Most people don't know that, okay? So Netflix is actually paying Amazon to host their site, and they're adding more content. If they're adding more content, they're taking up more space on the server, which means the more space that they take up, the more their monthly or quarterly fee to Amazon. So this is one of those examples I always talk about in the stock market about a co-relationship, right? Where one company is also doing business with another company. So when one company does well, both of them combined are reaping the revenue. Okay, so I think this is really fascinating. Amazon 52 weeks ago at $161 per share. Its 52-week high was $242. It's come off that just a little bit, but that stock is one that I see going higher. Again, I'm not telling you you should buy these shares, but I'm teaching you how the market works. And had you been in on owning Amazon shares just 1 year ago at $161, those shares have been as high as $242. Now, think about that in terms of 1,000 shares. $161,000 is now worth over $242,000. Where are you going to get that kind of growth? You know, when I talk to people all the time, I talk to them about their consciousness, their money beliefs, their wealths. Do they believe they can actually have money? For most people who listen to me and follow me, because I'm a major stock market influencer, for most people who listen to me and follow me, here's one thing they haven't realized. You see, in today's work world, as you get older, corporate America doesn't value your age and experience. So if you were 60 years old making, let's say, $300,000 and you get laid off, it's going to be harder for you to go out into the marketplace and get another $300,000 job, right? Why? You're older. They can get someone half your age, pay them half that salary, and let them grow into the position. Well, when you're trading time for dollars, right, one of the things you want to pay attention to is how your money and your wealth is growing as you get older, because the corporate marketplace is not going to pay you more and more and more. Otherwise, people who are 80 years old would be making $6 million. It simply doesn't work that way, right? So you only realize this when you have a financial education, that age doesn't mean more money for most people. However, if your assets are growing, like in Amazon at 161 to 242, time is really helping you if you've chosen the right assets. And regardless of what your age is, if you're listening to me right now, you should be thinking about getting wealthier with time. Now, real estate allows you to do that, but stocks really allow you to do it at an accelerated pace. Because the reason that Amazon shares have actually gone up is because there's demand in the marketplace for their products and services, and people who really understand the power of Amazon.com understand the growth that is going on in streaming and Amazon AWS. That's why the stock is rising, because there's demand for it. And therefore, if you're a shareholder, you're going to get wealthier sooner and faster. Back in a moment.
Want to increase your stock market trading profits? Then you need to start your monthly membership to WITradeschool.com right now. Don't understand how to write covered calls for monthly income? No problem. Simply review Tyrone's latest stock trades in our video library as many times as you need. WITradeschool.com is all about helping you get the financial education you need to earn money in the stock market and change your financial life. Tyrone Jackson, the wealthy investor, has helped his students earn thousands of dollars per month trading stocks online from home. These are people just like you. So what are you waiting for? Follow Tyrone Jackson's red-hot stock trades and investment strategies today. Don't wait. Start your monthly membership at WITradeschool.com right now.
And welcome back to Trading Stocks Made Easy. I'm your host, Tyrone Jackson, the lovable, but you'll discover that over time. Okay, we're really talking about investing and the stock market and investing in companies that have accelerated growth, which characterizes the era that you and I exist in. Okay? Now, technology has always been a popular place to park some money if it's in the right companies in the Dow Jones Industrial Average and the S&P 500, right? Not all Dow stocks rise, but if you learn the wealthy investor approach of how to go with stocks that have top-line revenue on a quarterly basis, you'll see the same pattern emerge. It's the same winners at the same show every 6 months or every 3 months. Now, my favorite stock in the stock market became my favorite stock literally 2 weeks ago. Why? Almost accidentally, they became the prettiest girl in the room. And without building up a lot of suspense, I'm just going to tell you who it is. It's Oracle, ORCL. Everybody is in love with artificial intelligence, and I hope you realize this next point. Artificial intelligence is about letting software do most of the work that human beings used to. And if you want to see that principle in play, just walk into your local McDonald's or Burger King. There are less workers than ever before there because now you place your order at a kiosk and there's just 4 people behind the counter now, maybe 5, who make the burgers, shakes, and fries and then kick it out to you. Because McDonald's has discovered automation. They're working on AI, letting artificial intelligence execute as much of that process as possible. But make no mistake, my friend, this is all about eliminating human beings. Well, when you build your AI database or your AI platform, it needs to be hosted. You want to go with a company that has the capacity to not only host your AI database for your enterprise, but also has adequate security. So Oracle has like 9 layers deep before you can hack their system. Why? Because they were originally in the database business and they had to protect all that data. Well, the protection of all that data is now translated to AI. Therefore, if you go with Oracle, you'll get those 9 layers deep of protection, but it doesn't come cheap. So now that the major companies and governments around the world want the security of 9 layers deep and they want Oracle, Oracle cannot keep up with the demand of all the companies knocking at the door. Now, who wouldn't want to own a business where you can't keep up with the demand? That's great. That means revenue growth, and that means that your dividend, if it doesn't rise, it's certainly secure for the shareholders. And that's what Larry Ellison and company revealed to us 2 weeks ago, that they've projected revenue in the next 3 years or 36 months to be over $1 trillion. Yes, $1 trillion. When I was in the 4th grade, that money wasn't even invented yet, but it's here now. And if you're an Oracle shareholder, you're the recipient of the growth in the stock as well as the quarterly dividend. Well, over the last 52 weeks, the shares went from $118 to $345 in 1 year. Not because of a fad or trend, but it's because they're at the forefront of database AI creation, and this is just the beginning, gang. So Oracle, you've made your way into the wealthy investor's heart. I think this is a stock for those of you who are familiar with building a position. This is a stock you build a position on every $30. But wait, if you're a member of the Wealthy Investor Elite community, we had our first meeting last night, you are learning how to what? Compound Leaps options and trade Oracle on its upward trend. It's very, 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 very lucrative. Okay? So the deeper you go in the Wealthy Investor program, there's more to learn about both stocks and derivatives. And when you get a company like Oracle, you can ride that horse to the bank, back home, to the bank, back home again, to the bank, back home, and 2 more trips to the bank. You stop and get some ice cream and you head on back home. Very lucrative. I do see a stock split coming in Oracle's future, but I don't believe it's within the next 52 weeks. But if you're a member of the Wealthy Investor community, I will certainly alert you. It'll be all over the media because a lot of people are going to get, well, really rich from this one company. Now, you got to remember, Oracle typifies the idea of co-relationships, right? Because if all of the major Fortune 500 companies in the United States and major companies around the world are trusting that Oracle Cloud and that Oracle database, it's got a co-relationship with almost every major company. So there's a saying in the tech business that everybody in Silicon Valley are frenemies. They hate each other. They're in competition. This billionaire versus that billionaire until they need each other. Now, when they need each other, that's where you and I get rich alongside them by trading their shares or holding them as a long-term investment. And these days, long-term means 3 years. So there is new technology being developed all the time. And as the marketplace shifts, I want to show you what stocks you should own. Now, other people are out there teaching you how to trade penny stocks and stocks that don't have any volume and how you can get rich. Really, what I like about my approach is, let's be honest, I created it, but it is proven it works, and it puts you alongside big institutional players who are buying millions of shares. So if you've got 1, 2, 3, 400 shares that you're actively trading with, don't you want to stand alongside the big players? You need them there because they're the ones who are really moving the stock. Why? Because their buying power is in the millions. So I want to be standing next to the biggest players in the world with my money because they're the ones that are really helping me make more money because they really move the market. I am the guy who teaches and demystifies how the market works. So if you're one of those people who have limited small beliefs about what is possible for you financially, I apologize up front. My systems are not going to work for you. But if you want to take a stab at the market and you want to grow your fortune and earn $5,000, $10,000, $50,000 a month, I am your guy. For how long? For life. The deeper you get into the Wealthy Investor Program, the more you'll realize you'll always want a coach by your side. Why? You want me on that wall. You need me on that wall. Do you remember that from the movie? You want me on Jack Nicholson? Okay. All right. That's it. Hey, listen, I hope you learned a little something here today about what's going on in our stock market. You ought to be a participant and part of the new round of wealth that's being created when? Right now. I'm excited for you. And as always, if you want a little bit more information on how to trade, maybe you're ready for WITradeschool.com, where you can follow my stock trades every single week. Or if you just want to learn what's going on in the market and be a part of the community, sign up for the free newsletter at thewealthyinvestor.net. You know what I can't wait for? I can't wait to meet you in person someday. And you tell me the stories that everybody has been telling me for the last decade. Man, Tyrone, you really changed my life. I can't wait for that to happen for you. All right, I'll see you right here next week at the Trading Stocks Made Easy podcast. And if this podcast helped you today, be sure and share it on social media. See you next week. Arrivederci.
You've been listening to the Trading Stocks Made Easy podcast. Be sure to rate and review our show on iTunes. While you're on iTunes, be sure to click the subscribe button and you'll automatically receive our next episode.